Hi, I'm Steve Spencer from SMB Capital. Today I want to actually talk to you a little bit about how the SPYs are setting up on the longer term chart. So the SPYs are an ETF representative of the S&P 500, and this is the large cap stocks. Generally, what I use to actually track the market more broadly, and many others as well. So since the beginning of 2016, the market broke below the 200 level. We started to see bear market trading conditions, which basically means more volatility, very heightened volatility, and that's continued through the first month of the year and through the first week of February. So this is bear market trading activity. Today's price action following the jobs number, the jobs report for January, was quite bearish. We started the morning around 191 on the SPYs. The low for the day was right around that 187 support, and that's actually going to be the focus of what we talk about coming into for Monday from a trading standpoint. And so if we look over the last couple of weeks, what we can see is today was the fifth time that the market actually came in and tested right around that 187. Now, if we look at it on the daily, you can see the way that I've drawn it, the downtrend from the beginning of the year, the little kind of flag moving up to where we failed around 194. And now today, we actually broke to the downside of that flag, which is quite bearish. But in order to get further downside and confirmation for either a retest of the recent lows or another leg lower, we are going to have to take out that 187. So I want to talk a little bit about how I'm going to look to trade it, how others on our desk are going to look to trade it, and maybe help you prepare a little bit for that. So at the 180, hopefully we closed around 188. Ideally, we would open up on Monday above 188 where we closed, perhaps even 189 or higher. That would put us in a good position to actually look for weakness in the market, to get short again, and to be in a position of strength when we come down to that 187 level. That's how I would look to play it on a gap up into strength. The other thing that I'll do if we gap up is I will buy some weekly puts because on that gap higher, they should come down in price, and that will allow me to put on more contracts for the same price because they'll be cheaper. So what happens when we get to that 187 level and we actually breach and we go through? What you want to see is actually a very quick move through the 187, 30 to 50 cents on the downside, and the possible spike higher where we fail right at the 187, a little bit below it, a little bit above it. But what we don't want to see, and what I've seen many times in the past, is a level that everyone is focused on, and a lot of people are focused on that level. We've held again 5 times in the last few weeks, and it's that higher low from the 181 low in January. If we break through that level and we spike right back up to 187.50, you want to be very aggressive covering shorts and actually looking to be long because people are going to be trapped at that point. And that's from a short-term trading perspective. The other thing is if we break to the downside, you want to look at some of these tech stocks that have been taken to the woodshed the last few days, like Netflix, Facebook, and some of these high beta names, and really identify levels on the long-term chart. I know Facebook today closed right at 104. 104 was really good support for November, December, when it consolidated between 108 and 104. Netflix has filled the gap from May of 2015. It was around 102.50 to 104 is kind of, 82.50 to 84 was the area. Netflix, I believe, closed right around those levels. If we do get that flush through 87, and we do get that powerful down move, $2 or $3 right on the open, we should get a puke out in Netflix, Facebook, these other high beta names that you can have levels and alerts set up and look for the final puke and the flush in those, nibble, and then look for some reversals and for those stocks to go positive. Similar to what we had in January, that Thursday in January, when they flushed down, they went positive, we had really, a big bounce. So those are kind of the things that I'm thinking about. Everyone on the desk is excited and anticipating this break to the downside. So that means there's a lot of people looking at it. And so we want to be careful that we get that price confirmation, that we don't get caught in a bear trap and really get ripped to shreds. And we've seen a lot of powerful moves from 200 down to 182. There's been 4, 5, 6 multi-point up moves in the SPYs very quickly. And bear market trading is dangerous trading. And even if you're short, you can get taken to the cleaners if you're not defensive when things aren't working from a price action standpoint. So hopefully this helps you prepare a little bit, and good luck.
Become a member of our trading community by joining SMBU Premium. Each month, as a community, we'll work together to improve our trading with a shared hour of learning. On our trading desk in New York City, the best traders continually grow. In fact, the best traders trade to grow. SMBU Premium is packed with 12 webinars, one a month, focused on market-specific trader training that will help you become a better trader by the end of the month. Invest in yourself, invest in your trading. As I wrote in the playbook, tomorrow you can be better than you are today. SMBU Premium, how good can you be?